And it says here the Federal Reserve's roughly $1 trillion pile of paper losses stemming from its underwater securities holdings have begun to turn into more than $100 billion in actual losses. Tweeted, America is going bankrupt, by the way. And he retweeted somebody else saying interest payments on U.S. national debt will shatter $1.1 trillion this year.
You don't have to go to Elon Musk. Even go to these technocrats with sharp pencils on the budget, and they say, this is not sustainable. We can't keep doing this.
By the way, while Trump
we're gonna copy third world. This is a third world agenda. You're just giving me a laundry list of third world rubbish.
We're speaking on the 26th of July. The PCE data just came out this morning. It's the preferred measure of inflation by the Federal Reserve. Core PCE came in at 2.5%, down from 2.6% the month before. Stocks are rebounding from their sell-off earlier this week. So what is going on? What is the market interpreting when it comes to inflation? We're speaking now with an expert on inflation and monetary policy, Steve Hanke. He is the professor of applied economics at Johns Hopkins University. Professor Hanke, always good to have you. Welcome back.
Good to be with you, David.
Good to be with you as always. PCE day. Let's start with that. 2.5%, still roughly in line with your expectations for. Remind us again. I believe it's 2 to 3% was where you think.
John Greenwood and I have, as a result of the fact that the money supply. Let's start at the beginning. The money supply, the stock of money measured by him too, is actually lower today than it was in July of 2022. So we've had a contraction in the money supply. That's very unusual, by the way. And with a contraction, you get, with a lag, lower and lower inflation. So inflation is being drugged down because of what happened, a year and a half, 2 years ago with the money supply starting to go south. So this lower PCE number of 2.5% is not surprising to me. And also, John Greenwood and I have the CPI, the Consumer Price Index, that headline number. We have it coming in by the end of the year between 2.5% and 3%. Right now, it's at 3%, the CPI, but they're coming down. These inflation numbers are coming down. And the main reason for that is, again, a year and a half ago, 2 years ago, the money supply started coming down.
By the way, the money supply has been ticking up. The year over year change in M2 is now slightly positive. I think it's still below your 6% golden rate, correct? Why is that significant?
Yeah. So the year over year rate of growth in the money supply is about 0.6%, about roughly half a percent. And to hit an inflation target of 2%, you should be operating at Hanke's golden growth rate for growth rate in the money supply of about 5 or 6%. So it's not only contracted and the stock of money is less than it was in July 2022, but this little uptick we've had for the last couple months on a year-over-year basis is peanuts compared to where it should be to be consistent with hitting the 2% inflation target. It's way below. I mean, it's less than 1%. The year-over-year growth rate should be 5 or 6.
Okay, so bottom line, you still think there's going to be disinflation in the order of around 2% until the end of the year into next year, Professor?
Well, the CPI, not the PCE. The CPI, Greenwood and I have it coming in around 2.5 to 3%. That's the range, and it's already at 3% and falling. So we're clearly going to hit the bullseye again using the quantity theory of money. Money is the fuel in the economy, and the changes in the money supply are what make nominal GDP go up and go down, depending on how fast the money supply is going up or going down. And what is the nominal GDP? It has two components, inflation and a real component.
Very good. I want to come back to global inflation, if there is such a thing. We can comment on that. The IMF just came out with their latest economic outlook report. But first, this article here from Market Watch, quite interesting here. It highlights the income statement from the Federal Reserve, and it's highlighting $100 billion loss, right, in 2023. And it says here the Federal Reserve's roughly $1 trillion pile of paper losses stemming from its underwater securities holdings have begun to turn into more than $100 billion in actual losses. It then goes on to say that this could continue well into the next decade, according to an analyst from this firm called Monachil Capital Partners. So my question is, Professor, let's assume they're still underwater in actual losses. Will this have any impact on the money supply?
Broadly speaking, no. The big effect of this is that if the Federal Reserve makes a profit, the money is actually transferred to the government account. It's transferred to the government. So it's a source of funding for government expenditures. And if the Fed is making losses, that transfer doesn't take place. There's no money to send to the Treasury and the government's general account. So what's that mean? That simply means that if nothing else changes, the deficit would be larger than it would be if the Fed would be sending profits and funds to the government's general account. So it's more of a fiscal effect than a monetary.
Is the Federal Reserve in trouble? If some people have commented that they're quote unquote going bankrupt. I mean, if this were an actual bank, I mean, $100 billion in losses a year would mean bankruptcy, but I guess that doesn't apply to the Fed.
Well, yeah, the Fed's a central bank. It isn't a,
Right.
I was going to say it's not one of those other kinds of banks that can go that can central banks do and occasionally become insolvent. By the way,
How does that make sense? What does that mean?
well, I mean, that they can print their way out of the problem.
Right. Okay.
If, you know, so it can happen, but the printing press is always available.
Are you concerned they will turn on the printing press because of this loss?
Probably not because of the loss per se. What concerns me is that the Fed doesn't look at the quantity theory of money. They have another model, and the model is a post Keynesian macroeconomic type model. They have several, but those models don't include the money supply. The quantity theory of money, of course, does include the money supply. It's M, the supply, plus V, the velocity, equals P, the price level, times plus Y, the real rate of growth in the economy. So that's the equation of exchange that goes along with the quantity theory of money. And M is one of the variables, the money supply, changes in the money supply. What's the percentage change in the money supply? If you add that to the percentage change in the velocity, it's by definition equal to percentage change in the price level plus percentage change in the real rate of growth in the economy.
Well, I don't know if the IMF uses the quantity theory of money when making their inflation assessment, but let's just take a look
No,
at what they do.
no, they
Okay.
don't. And you mentioned the world inflation. Inflation is not a global or a world thing. It's a local thing. Every country has its own central bank. Well, some countries are lumped together. For example, the Eurozone now, the European Central Bank functions as a central bank for those who are members of the euro. But countries that have central banks produce their own money, and that grows at different rates, and the inflation rates are different in the different countries. So John Greenwood and I have just looked at 27 countries around the globe that comprise about 75% of the world GDP, and we find that you kind of we call it a roller coaster, an inflation roller coaster from 2020 through this year, 2024. First, you get in some countries the ride has been wild because you had a big increase in the money supply, and of course the inflation followed by, on average, about 24 months, you get inflation peaking out. So money supply peaks out 24 months later, you've had inflation peaking out. Now that I can give you the countries where that happened, and 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 those countries are as follows: U.S., UK, Eurozone, Denmark, Sweden, Canada, Europe and Canada. Canada's in there. Australia, New Zealand, Argentina, Brazil, Egypt, Ghana, Israel, Mexico, Nigeria, Peru, Philippines, Sri Lanka, Turkey, Thailand. Those had a wild ride. Inflate, and the money supply went up rapidly, grew rapidly, and peaked out. And then, on average, 24 months later, the inflation peaked out. So that's the wild roller coaster. The ones where didn't get much of a wild ride were China, Japan, Switzerland, Malaysia, India, Indonesia, and South Africa, because they didn't goose the money supply as much. And as a result, the inflation did peak out about 24 months after the peak, but it didn't amount to much. For example, the peak in China, to give you an idea, the peak rate of inflation that followed the peak rate of growth in the money supply was what? 2.1% in China. I mean, right now, China almost has no inflation, by the way.
So when the
So
IMF makes
this IMF thing, they add everything up, they aggregate it into some big aggregate number that's kind of basically meaningless, because the individual components of that depend on the individual rates of growth in the money supply in the countries, and of course the individual inflation rates, which vary all over the place.
Just to add some context for the audience, we're referring to a recent World Economic Outlook update published earlier this month in July. And it says here, the momentum on global disinflation, which you just addressed, Professor, is slowing, signaling bumps along the path. This reflects different sectoral dynamics, the persistence of higher than average inflation in services prices, tempered to some extent by stronger disinflation in the prices of goods. What's your response to breaking up inflation by goods and services?
For some purposes, it's fine because, for example, commodities are very sensitive, and they react much more rapidly than other components in the price index, whatever the broad price index, CPI or PCE or whatever the index are. There are a million broad indexes that include a lot of things, but the commodity part of it moves around and is quite volatile, and it will react more quickly to changes in the money supply than other parts of the index. The one that comes last is services. Services are the last thing to adjust. So all these things in the index, some of them come early and some lag way behind. Services lag way behind. But the overall index is what is important. That is the overall price level. And that is determined by what's been going on about a year and a half, 2 years, maybe 2.5 years before in the money supply.
This is also what they said. IMF stat projections are based on upward revisions to commodity prices, including a rise in non-fuel prices by 5% in 2024. Energy commodity prices are expected to fall by about 4.6%. What's your outlook on commodities?
Okay, see,
Yeah.
the point you just raised is key, because they're looking at changes in relative prices.
Okay.
And commodities like oil is a commodity, that's a big one, by the way.
Sure.
Most probably the most important one. And oil price it goes up and it goes down. But the price level itself is kind of a separate thing. I mean, the oil prices are part of the index, but only part. And oil prices can be going up, for example, and everything else in the index going down. So the relative price is oil relative or commodities relative to everything else. And that's not the way to look at aggregate price indices like the CPI. What's the CPI? Well, the CPI, it has over 300 items in it. It's a big basket with a lot of stuff in it, and some things are going up in the basket, and some things are going down, or they're going up and going down at very different rates. But the basket itself is, when we talk about inflation, we don't talk about specific things like commodity inflation. You can talk about it, but the average person, when they think about inflation, and we talk about inflation as a generic thing, it's the big basket going up and going down. I mean, where's the big basket now in the U.S.? It's about 20% higher than it was at the start of 2020, at the start of COVID. And of course, that's why voters are so mad about and complaining about inflation. The rate of inflation, the rate of increase in that aggregate is slowing down. That's what you and I just were talking about earlier. It's slowing down to maybe at the end of the year 2.5% to 3%, according to Greenwood and myself. But the big complaint everybody has is that the basket itself is about 20% higher than it was 4 years ago. And of course, that's the gripe about Biden.
What about
people keep saying, well, you whipped inflation, it's coming down, but everybody going to the store is realizing it's a sticker shock, because 4 years isn't that long ago, and if something is overall, if what you're buying is 20% higher, you're basically hitting sticker shock every time you turn around.
this came in from Twitter. I like you to respond to this tweet, please, Professor. So Elon Musk tweeted, "America is going bankrupt," by the way. And he retweeted somebody else saying interest payments on U.S. national debt will shatter $1.1 trillion this year. It says here it's going to eat 76% of all income taxes collected. Now, I ran the number I ran the numbers myself. The Federal Reserve, so the federal government tax receipts is around $3 trillion. So it's really around 33%, not 76. I don't know where they're getting that from, but regardless, it's a huge number. My general question is, do you agree with this assessment? America is going bankrupt. It's sensational, but what's your reaction to that?
It is sensational, but the general point is, the general point is correct, and that is that the debt to GDP ratio is increasing. It's over 100%, and even if you go to the nonpartisan Congressional Budget Office, you don't have to go to Elon Musk. Even go to these technocrats with sharp pencils on the budget, and they say this is not sustainable. We can't keep doing this, and I agree, we can't keep doing this. So if something is not sustainable, my famous line, Herb Stein, who was a chairman of Nixon's Council of Economic Advisors, said once, and of course people love to quote, "If something can't go on, it will stop." And so the question is, well, how will this stop? And there are only three ways to stop it. One, rein in government spending. That's possible. Two, increase direct taxes. Three, increase the inflation tax, or some combination of those three things. So that's one thing we can anticipate. That something in that 3-point mix, that three-legged stool, will occur to stop the unsustainable. which that's really what Elon Musk is talking about. When he says bankrupt, he means something has to change, and something will change. Either direct taxes will go up, or inflation taxes will go up, or we will cut and rein in government spending. My own preference, by the way, is to rein in government spending. That because government spending is a real drag on the economy and productivity in the economy and the dynamics of the economy. And how do you do that? I think the best way to do that is to have a constitutional convention and change the U.S. Constitution as they did in Switzerland. And we put in something like a Swiss debt brake where government spending could not go up any more rapidly than real growth in the economy. Point number one. And point number two in the Swiss debt brake would be that the budget over the intermediate term would have to be balanced. So it's kind of a combination of constraining government spending to the rate of growth in the economy and balancing the budget.
Suppose we don't have this constitutional change. What is the most likely outcome?
Well, then you'll have some hodgepodge of a mix of those three things. Inflation tax, direct taxes going up, and government spending not being as reined in as a Swiss debt brake.
By the way, this is what Donald Trump said on the campaign trail. He said, I will end the devastating inflation crisis immediately, bring down interest rates, and lower the cost of energy. There's been people online pointing out the fact that you can't have it both ways. If you lower interest rates, you're going to risk raising inflation. Now, I'm going to just throw this at you,
No,
Professor.
that has the causality wrong. If you go back through the centuries, and this gets back into the quantity theory of money too. They're just not paying attention to the fundamentals. And what happens is interest rates and yields on bonds, they follow inflation. They don't lead it. Interest rates don't come. In other words, if you increase interest rates, you don't increase inflation, or you don't necessarily decrease it either. Changes in the money supply will affect changes in inflation, and changes in inflation are followed by changes in the interest rates. That's how it works.
Lower interest rates and lower inflation, which is what Trump said.
Well, no, yeah, but that means you'd have to have first. You have to have the growth rate in the money supply at some reasonable level that allowed you to reduce inflation. So you've got to start with the money supply, and if you control the money supply, you can control inflation, and if you control inflation, you're going to have bond yields that follow whatever that controlled number is.
Okay. He also said he wants
let's go through a hypothetical. Let's go through a hypothetical.
Okay.
The hypothetical is that I'm going to change the inflation target in the United States from 2% to 0. So we're going to have no inflation. And to get that, how do we do that? Go back to what I gave you, the 2 plus 2 plus 2 thing. It would be 2 plus 0 plus 2. So the golden growth rate for the money supply would be 4% per year instead of 6% per year. And then you hit the 0. You don't have any inflation. And as a result of that, interest rates are going to be lower than they are right now. That's for sure.
Okay.
And by the way, I think long-term interest rates in the United States, since they do follow inflation, will be coming down because I told you the inflation, according to the forecast that Greenwood and I have, 2.5% to 3% by the end of this year, probably in 2025 below 2%. Well, that's those are lower numbers than we have right now. Right now, the headline is 3%, and that means the long-term interest rates will come down from where they are right now. What's that mean? That means that's probably a pretty safe investment, because if the yield on the 10-year falls from 4.2%, let's say, down to 3.7%, that means that the price of the 10 years is going up. There's an inverse relationship between the yield on bonds and its price. So you not only are going to be getting a pretty good yield on that bond, but you'll get a capital gain because the price of the bond will go up. So it's a pretty good trade.
On energy now, Trump said he wants to lower the cost of energy. Just generally speaking, is that something the government can do?
Well, the yes, uh, but the how big the impact is another issue. But the answer is yes, and especially now you realize that the U.S. is actually exporting a little oil right now and other energy. So if you have policies that are very favorable to the oil industry, and the oil production goes up, and the U.S. is a big supplier. I just said they're actually the biggest one now, and we're exporting oil. We're the biggest producer. We're exporting oil. That means what? Well, the supply curve. Look at a supply and demand diagram, and if the supply curve shifts out to the right, what happens to the price? It goes down. If demand remains constant and in a stable position, and the supply curve shifts out to the right in a supply and demand diagram, the equilibrium price is lower at the new intersection of the new supply curve with the old demand curve. So the answer is yes. Government policy can affect where the supply curve for oil and gas in the United States is going. And if government policy is favorable, the supply curve will shift out to the right, and the price will go down.
Some people are saying that Trump's policies are inflationary, and this is why. His running mate JD Vance wants to lower or weaken the dollar for a variety of reasons. One of it, which is that he wants to make American exports cheaper. Their strategy is to bring more manufacturing back home domestically. If we're producing more goods, the rationale is you need to weaken the dollar in order to strengthen your exports. What's your reaction to this?
I think it's a stupid idea.
Okay. Why? Why is that?
I would get him. He gets an F for that.
Wait a minute. Now, on which part? The weakening of the dollar part, or the domestic
Yeah.
production part?
Why would the White House want to be in there fooling around with the value of the dollar, or
Well,
or or
because they
talking
want to
about it,
make
and
exports.
talking about it, especially in the context of of this is a beggar thy neighbor kind of thing, where let's weaken the dollar so we can increase exports. It's gonna lead to problems.
First of all, we'll talk about these problems. First of all, so hypothetically, how would the White House, not the Federal Reserve, but how would the White House go around or go about lowering or weakening the dollar if it really wants to do so?
Well, they could talk it down, or they could have an international, they could have an international meeting. Remember the Plaza Accord? So they could, by having an international meeting, getting everyone to agree that they're gonna try to change the configuration of the exchange rate somehow. So that would be one possibility. The other possibility is that the Fed is not really the one that's responsible for the dollar. In a way, they are indirectly, but the legal mandate is with the U.S. Treasury. So the U.S. Treasury could intervene in some way.
This
I
is
mean,
this
there are a number of indirect things that could happen, but I think talking about it is a loser's game.
this is what okay, this just came in today actually on the 26th of July. According to Reuters breaking news, Donald Trump says he wants to reverse the strong dollar policy, which has underpinned the U.S. economic framework since the early 1990s. He says, "We have a big currency problem." In an interview with Bloomberg, his choice for Vice President J.D. Vance goes on even further. Like I said, he said the senator from Ohio wants to get rid of the dollar's role as a de facto global currency as well. He said, quote, "The strong dollar is sort of the sacred cow of the Washington consensus. But when I survey the American economy and I see our mass consumption of mostly useless imports on the one hand and our hollowed out industrial base on the other hand, I wonder if the reserve currency status also has some downsides." Can you?
Well, no, it doesn't at all. It's why we can run trade deficits every year since 1975. It's a privilege we get of being able to finance those deficits at low interest rates. So it's a huge benefit. Being in the international currency is a huge benefit to the U.S. We consume a lot more than we produce, and we can easily do that and finance it cheaply because the U.S. dollar is the international currency. So it's nonsense. Vance is being guided, and this is all talking points from the cryptocurrency crowd. He's filled his head full of sugar plums. These guys have no idea what they're talking about. They're talking their own book. They're talking their crypto book. That's what he's repeating that, but he doesn't even know what he's repeating. I'm telling you what he's repeating, but he doesn't know what he's repeating. He's listening. This is all crypto talk. The cryptos would like to destroy the U.S. dollar. I'm a strong dog. Remember, I was on the President Reagan's Council of Economic Advisors. We're strong dollar. So supply side economics and Reaganomics is strong dollar. The strong dollar is where we want to go. What's the strongest currency in the world for a long, over 100 years? The Swiss franc, and the Swiss are big exporters. The strong dollar helps them because it actually makes the Swiss economy and businesses more productive because they're not looking to the government to somehow weaken the Swiss franc and the currency to basically bail them out. They realize that to be competitive, they've got to be highly productive and efficient, and they are highly efficient and productive. And by the way, they run a current account surplus, not a deficit. But the Swiss franc, just for context, since World War One, that's the only currency that's appreciated in real inflation-adjusted terms since World War One. It's stronger than the U.S. dollar. It's not the global international currency because Switzerland, of course, isn't a giant economy like the U.S. But nevertheless, I think the history of the strong Swiss franc is where you want to go. If you want a weak currency, by the way, that's a great idea. Go to South America. If Vance knew what he was talking about, he'd look at Argentina and see what a pickle they're in. He'd look at all these countries where their currencies have lost virtually all their value in a matter of 3 or 4 years. They have huge inflation problems, and they are countries in which the dollar is king. Everyone wants to get out of these junk currencies like the Argentine peso and put greenbacks under their bed. The supply of greenback notes, US dollar notes, is in Argentina the second largest supply or hoard of dollars in the world. Of course, the first hoard is in the United States itself. So Vance is just talking. Vance is talking utter nonsense.
Well, this is going back to my earlier question as to how the White House could control the dollar. This is further down in this article. It says here Trump has been thinking about imposing capital controls to stem demand from overseas investors for American assets and the dollars needed to buy them.
Number one, I don't know where this report's coming from. This is all highly speculative, but let's say it's a hypothetical.
Okay.
Who's reporting this? Where are you reading
I'm reading
this?
this on Reuters. It's they're talking
Okay.
about yeah. Anyway, but
So
let's make it a hypothetical. Yeah.
we don't know what the Reuters spin and what Reuters is trying to do here. Whether they're trying to smear Trump, it sounds like a hatchet job on Trump. Actually, if you, that's my interpretation. Capital controls. We want capital controls. So that's what they have in Argentina. I mean, this is complete madness.
So okay. So you're opposed to that. Okay. You you what should the
Yeah,
appropriate policy be? Yeah.
I'm opposed to capital controls on steroids. I'm not just opposed. I'm opposed on steroids. We're you want to make us a third world country? Impose capital controls on the U.S. dollar? This is complete nuts.
Is there a president
I
of
mean,
having this
really,
happen?
we're getting out we're getting out in la la land here, David.
Yeah. Well, is there any precedents of this happening in the past?
Oh, oh yeah, go back to the Great Depression, the
Okay.
Smoot-Hawley tariff, and that's the model is the Great Depression.
Okay. Well, I will note that what I just read, which is more or less what JD Vance was quoting, is kind of a contradiction to what the 2024 Republican Party platform, the GOP platform, Make America Great Again. There's a list of bullet points of the things they want. One of them is keep the U.S. dollar as the world's reserve currency. So there does seem to
Yeah,
be some
right.
contradiction there.
Yeah, that's the. I think the starting point should be that platform statement, not some Reuters thing.
Yeah, oh, I mean,
Remember my 95. Remember, David, my 95% rule. Hanke's 95% rule is 95% of what you read in the press is either wrong or irrelevant.
okay, you know what else has been circulating in the press? I know what you're going to say, but I want to get your response anyway. Donald Trump is going to very soon announce some sort of U.S. Bitcoin strategic reserve. How likely is this going to happen? Even if he said he wants to do it.
The answer is I don't know, but the crypto crowd has been I do know that the crypto crowd has been trying to lean on the candidates as much as they possibly can and fill their heads with nonsense.
Yeah, he's
that by the way, that's exactly what Bukele, the president of El Salvador, did.
By the way, while Trump
we're gonna copy third world. This is a third world agenda. You're just giving me a laundry list of third world rubbish.
But this is what he has been doing. The Donald Trump on the campaign trail has been trying to appeal to crypto investors by raising money in cryptos for his campaign. He's raised more than $4 million so far from a mix of digital tokens, a campaign aide told CNBC. Contributors have donated Bitcoin, Ethereum, a list of other things. Right. So I don't know if he's going to make this an official state policy, but yeah.
That's why I did indicate early on when you brought up the JD Vance thing. I said he is echoing talking points from the crypto crowd. That's what he's I do know that that's what he's echoing with what you stated. Getting rid of the dollar as the international currency. Remember, they're all off on this de-dollarization kick. They their narrative is that the forget Vance and Trump and the elections or anything like the White House, all that stuff. They basically are making an argument that the U.S. dollar is doomed anyway, and you better be jumping into crypto as fast as you possibly can to save yourself. That's their sales pitch.
Communicate your message as to why we may or may not need a so-called Bitcoin strategic reserve, which, by the way, is what El Salvador did in the U.S. What would that message be?
Oh, well, Bitcoin is a highly speculative asset. That so do you want as your reserve a highly speculative asset with zero fundamental value? Yeah, yes or no?
It's a rhetorical question. I'm not really sure how to answer that. I know you want me to say no, so I'm gonna say no.
Let me interview you.
Yeah, I don't know what am I passing this exam here? I don't know.
Well,
I
you haven't answered yet, so I can't grade you.
but this is my retort to your rhetorical question. Some people might say the dollar has no fundamental value either, right? I mean, at
Well,
least Bitcoin has a cap of how many you can, in theory, mint. There's no cap on the dollar. You could print this
there's
to
no cap
infinity.
on the dollar, but at least you can buy things with the dollar, and it is the international currency that everything is invoiced and priced in,
Sure.
and it's also the currency that's on the other half of over 90% of all the foreign exchange transactions in the world. So it has a use value. It might not have, as they say, a fundamental value because it's a fiat currency. You can't redeem it into gold. It's not a gold based or commodity based currency like all the international currencies we had before 1971. By the way, when the gold window was closed, all of those had in principle a redemption value. You could redeem the currency for either, in most cases, either silver or gold. So they're all fiat in that sense, but you have to be thinking in terms of what about the use value? What's the use value of Bitcoin? Well, it's not very usable. I mean, the criminals use the thing. They're about the only ones who use it.
All right. Well, great talk. I want to end on this article here. Maybe I'll just get a quick comment here. Bloomberg article: A key U.S. regulator has privately found out half of major banks it oversees have an inadequate grasp of a broad swath of potential risks, from cyber attacks to employee blunders, according to people familiar with the matter. In the confidential assessments, the Office of the Comptroller of the Currency said 11 of the 22 large banks it supervises have quote unquote insufficient or weak management of so-called operational risk. It doesn't really go into too much more detail than that,
It,
but
it, it,
yeah.
it, that rings true to me.
Okay.
And let me tell you what the basis for that. It's a small sample. I haven't done an audit like this. What you're quoting from is a comptroller. I guess the comptroller supposedly has done an audit or evaluation and so forth. But I, as you know, as a professor, of course, I I profess and I train quite a few students who go to Wall Street, top investment banks and so forth. And I spoke to one of my former students who's been on Wall Street now for 5 or 6 years. Top firm, top student, top young man, and he literally told me that about half the analysts at the top firm where he was are clueless, don't know what they're doing. So just based on kind of getting a sense of what's going on in the intelligence I get from my students who actually know what they're doing, by the way, they know what they're doing, they've been properly trained, and they all do quite well. The feedback I get is pretty consistent with what I just told you, that there are a lot of the young people really just don't have their suspenders on. They really don't know what they're doing. So if that's the case, would you think that risk management at the banks is under control?
I mean, that does raise a question as to whether or not there needs to be either more oversight from the regulators or perhaps tighter capital controls. I don't, do you have any thoughts as to?
Well, it isn't the controls. We have all the controls and monitoring and everything. You have to have good people running these things. We're talking about risk management. That's a fairly complicated subject. And by the way, I know about this because one of my former students from many moons ago is a top risk management man at a huge international bank, and he does know what he's doing, but he's had lots of experience as a trader and everything else. So so that bank, which I won't name, is probably in pretty good shape. I don't think it's one of the ones where they have a problem.
All right, so this is just a people issue. All right, well, very good. Thank you very much. Where can we learn from you, Professor?
I think the best place is to follow me on Twitter at Steve underscore Hanke, or if you want to send me an email and get on my distribution list, my email is hanke at jhu.edu.
Very good. Thank you very much, Professor. You've been very generous with your time. We'll put the links down below so people can follow Professor Hanke there. Appreciate it. Speak next time.
Be great. Look forward to it, David. Have a great weekend.
You as well. Oh, by the way, for the people watching this right now, feel free to submit questions to Professor Hanke or myself. I didn't read any viewer questions this time. I have my own questions, but next time I'll resume that practice. So make sure to
Okay,
write to us.
it'd be great. Yeah,
Yeah.
the viewer questions are sometimes almost as good as yours.
Oh, I get ideas from my viewers. They're very tuned in crowd. So yes. Um, yeah, that would be appreciated. Anyway, thank you, Professor. We'll speak next time.